Trump raised tariffs on all Chinese imports from 104% to 125%, while giving most other countries a 90-day break and slashing their rates to 10%. China was deliberately excluded, with U.S. officials accusing it of IP theft, market manipulation, and weaponizing supply chains. Internal briefings revealed Trump's team sees Beijing as a strategic adversary, not just a competitor. Now, U.S. giants like Apple, Tesla, and Pfizer, deeply reliant on Chinese production, are facing massive cost spikes and operational chaos. Let's start with Apple, because prices are about to skyrocket. Despite efforts to diversify, Apple still depends heavily on China for its most precise manufacturing tasks. Assembly hubs in Zhengzhou and Chengdu handle a massive share of iPhone and MacBook production. Yes, some lines move to India and Vietnam, but the supply chain's brain and muscle still in China. With tariffs jumping to 125%, Apple faces up to 40% cost spikes on flagship products, and consumers will feel it. The iPhone 16, expected later this year, could launch with a base price over $1,400, potentially pricing out millions of buyers in the US and Europe. But if Apple's profit margins are threatened, Tesla's supply chain could grind to a halt. And it all starts with batteries. Next, Tesla, whose real weakness isn't in cars but batteries. Even though Gigafactory Nevada handles battery assembly, key materials, lithium, cobalt, nickel, are still processed in China, largely by giants like CATL and Ganfeng. These now face 125% tariffs too. Tesla's own internal memos warn of delivery delays in Q2 and Q3. Wall Street estimates the company could take a $1.2 to $1.6 billion earnings hit in 2025, just from rerouting costs and input price hikes. And if cars and smartphones are feeling the heat, the stakes are even higher when it comes to your health. If smartphones and EVs are struggling, medicine may be the real breaking point. It's not just drug ingredients facing pressure, it's the machines that make them. Over 60% of U.S. pharma-grade equipment like centrifuges and reactors comes from China. With the new 125% tariffs, these machines now cost nearly triple. That's bad news for generic drug makers already running on thin margins. Many are delaying upgrades or halting expansion plans, and that directly threatens U.S. efforts to reshore pharmaceutical manufacturing. The result? Fewer facilities, lower drug output, and longer wait times for new generics. And while drug makers struggle to keep production afloat, another pillar of the American economy is already buckling on the farms of the Midwest. Now to U.S. farms, where the fallout is already visible. China is a top buyer of U.S. soybeans, pork, and corn, worth nearly $29 billion a year. Based on patterns from the last trade war, farmers expect Beijing to cut these imports in retaliation. And it's already started. Exporters in the Midwest are reporting shipment cancellations. Soybean futures have dropped 11% since Trump's announcement. The American Farm Bureau now warns this year could see the worst farm income crash since the Great Depression. And if China strikes back harder, this trade war could turn into an economic wildfire. The financial markets haven't stayed calm either. Since the April 9th announcement, the Nasdaq Composite has dropped over 2.6%. Apple and Tesla stocks alone shed a combined $110 billion in market cap. Healthcare sector ETFs also dipped as investors anticipate drug shortages. Market analysts warn that if China retaliates on tech and pharma, volatility could deepen, possibly triggering a summer correction on Wall Street. While Trump's 125% tariff move aims to project strength, it has revealed just how entangled U.S. industry remains with China. In technology, energy, healthcare, and food, the Chinese economy isn't just a rival, it's a foundational pillar. And unless a recalibration happens quickly, the next chapter of this trade war might not be written in Beijing or Washington, but on the balance sheets of collapsing U.S. companies. If prices keep rising and jobs start vanishing, are you the ones paying for this trade war? Let us know your thoughts in the comments and subscribe for more.